SEC Chairman Gary Gensler recently addressed Bitcoin in a discussion with CNBC, emphasizing the cryptocurrency's incorporation into the SEC's investor education initiative. Gensler highlighted the prevalence of Bitcoin as the primary method for ransom payment in ransomware crimes, underscoring its significant market share in such incidents. According to the SEC Chairman, Bitcoin stands out as the most commonly utilized cryptocurrency in the realm of ransomware activities. So don't forget to subscribe, like, and share, and let's start. And we're starting off with Justin. BlackRock spot Bitcoin ETF showing unusual strengths with top 1% numbers and trading volume, Bloomberg's Eric Balchunas. Next up, Justin. Massive volume for BlackRock's Bitcoin ETF, a volume of over 24 million shares on the day, equating to over $700 million in price volume. There is an insatiable demand for Bitcoin on Wall Street. Big breaking news, Bitcoin miners begin receiving letters from the EIA forcing them to report sensitive data. The miner who received this letter only has 10 days to respond to the request by the EIA or face huge fines or worse. Fortunately, we have a plan on how to fight back, but let me share more about the EIA mandated survey. On January 24th, the Department of Energy issued a statement saying that Bitcoin mining was likely to cause public harm. The federal government then used its emergence powers in collaboration with the EIA to enforce miners to report their location, energy use, and energy supplier. I have said many times that I strongly disagree with this move by the EIA to categorize miners as the threat to the public, while also mandating that miners report sensitive data to the EIA. This is not how federal government should be interacting with the new and growing industries that has so much potential. The Bitcoin mining industry is filled with innovators and builders. We should be encouraging them, not threatening them. Bitcoin mining has the potential to radically reshape the way that we manage, produce, and transmit energy in the USA. Bitcoin miners now know this, and they are more than happy to collaborate in order to prove that mining is a powerful piece of technology which can be and do good for the grid, the economy, and the environment. Bitcoin miners are increasingly showing their willingness to be transparent, as Bitcoin miners are ready to begin showing the world what the technology is capable of achieving. And I know this because my team has been working diligently with Bitcoin miners to help them showcase the ability of Bitcoin to balance the grid and mitigate methane emissions. We have been working with Bitcoin miners large and small to accomplish our goal of educating lawmakers and regulators on the incredible benefiting of mining. Just recently we produced a paper with his former ERCOT and New York ISO CEO which outlined the benefits of Bitcoin mining to the grid. And we are also diligently working on paper to show the value of Bitcoin mining as the methane capture tool. More coming soon, and that's basically it. I have this to say, the boomies who think my generation is going to pay off the $34 trillion debt you racked up, the US dollar can go to hell and we will go to the Bitcoin. Historical Bitcoin prices on Valentine's Day: 2014 $662, 2015 $257, 2016 $407, 2017 $1,000, 2018 $9.5 thousand, 2019 $3.6 thousand, 2020 $10.3 thousand, 2021 $48 thousand, 2022 $42 thousand, and 2023 $22 thousand. And the last one and the biggest one is 2024 with $51,658. That's massive. 14 years ago today, Satoshi Nakamoto said there will either be very large transaction volume or no volume at all. Today, Bitcoin crossed the 1.1 trillion market cap, and that's right here, right? Otherwise, we couldn't have a finite limit of 21 million coins because there would always need to be some minimum reward for generating. In a few decades, when the reward gets too small, the transaction fee will become the main compensation for nodes. I'm sure that in 20 years, there will either be very large transaction volume or no volume at all. Bitcoin history repeating, and here we could see what we had in 2020, 2021, and now what we're getting in 2023, 2024. Also, the last time Bitcoin was at 50,000, Google's search trends was above 90, and today Bitcoin is ripping through the 52,000 and Google's search trends are below 20. Retail is sleeping and this party hasn't even started yet, and it's all just about to start. Bitcoin 55,400 could be next. As I've been asked a lot what is the next for Bitcoin in the comments, here's my analysis, bookmark it. Both target 1 and 2 have been hit by 50,900 is a strong level, and if Bitcoin managed to close a weekly candle above the target 3 at 55,000 is next. Note this, that given the extremely bullish momentum, target 3 has high chance to get hit even before the end of the week. Also, SEC Chairman Gary Gensler speaks about Bitcoin. So SEC Chairman Gary Gensler made a new statement about the Bitcoin. Speaking to CNBC, Gensler said that Bitcoin was also included in the SEC's investor education program, as Gensler also underlined that Bitcoin is the most commonly used ransom payment method in ransomware crimes. And to a more detailed information. In a recent public conversation with CNBC, Gary Gensler, the chair of the US Securities and Exchange Commission, once again did what he has come to be known for Bitcoin, the first and most widely used digital currency, and perhaps Gensler's archenemy. At this point, it's just getting tiring listening to him talk about the Bitcoin. Anyway, this time the SEC boss boldly said that Bitcoin is hardly the beacon of decentralization it's touted to be. Gensler has frequently positioned as a central figure in a battle against the ransomware and other malware attacks, further complicating their narrative around the Bitcoin's role in a modern financial ecosystem. So what exactly does Gensler even mean? When the CNBC interviewer floated the term decentralization in the midst of their dialogue aiming to cast Bitcoin in the usual revolutionary light, Gary Gensler didn't just disagree, he practically cut him off with a blunt. It's not the decentralized, he then doubled down, steering the conversation towards a broader, perhaps more profound critique of the financial system gravitational pull towards centralization, a trend as old as money itself. He elaborated, not missing a bit, as yes, but also it's everything. Look how finance tends towards centralization since antiquity, and his agreement is that the cryptocurrency ecosystem, despite its high-minded ideals of decentralization, isn't all that different, with only a select few entities really understanding or controlling the majority of the so-called decentralized assets, as Gensler threw a bucket of cold water on the fiery idealism surrounding Bitcoin's revolutionary ledger technology, as he reduced it to what it fundamentally is, an accounting ledger, albeit a clever one. It is a ledger that everyone has. And he said, but with a tone that suggested he found the widespread fascination with the aspect a bit overblown. The paradox amidst the criticism. Since becoming chair of the SEC, Gensler has taken a position that is, in terms of the cryptocurrency regulation, best categorized as enforcement heavy. His tenure has been defined by a steadfast dedication to drawing attention to the risks associated with the digital assets, as both in terms of their intrinsic volatility and their potential use in illegal operations. Regardless, he seemed to be at odds with his often critical stance on the asset class when earlier this year, the SEC, acting under his supervision, approved 11 spot Bitcoin ETFs. But on the other hand, there were certain conditions attached to his decision. Our body made sure to mention that assets involved remain the same, comparing it to the applications that were turned down before, but also noting how things changed for the better. That's all the information we got on today's video, so don't forget to subscribe, like, and share. See you in the next one, and peace.